Claro, ¿en qué te gustaría que te ayudara?
Hey, why you don't speak English?
Of course I can speak English. How can I assist you today?
Okay, so we will be continuing to discuss current US market performance. And now it is showing a dropping. So I will be
The US
asking you
stock market has
a
been
few
volatile
questions.
recently due to it seems like there was a
Okay,
recent
okay,
tweet as well.
understand. So I will be asking you some critical questions for our further discussion. So my first question is, how likely is a ceasefire in the Israel-Iran conflict by July 2025? And what would it mean for Nasdaq 100 recovery?
Right now, there are ongoing diplomatic efforts led by Gulf states like Oman and Qatar to push for a ceasefire between Israel and Iran, possibly by July. Iran seems open to negotiations if hostilities stop, but the situation is still fluid. If a ceasefire happens, that could boost market confidence. The Nasdaq 100, which has been hit by recent volatility, might recover quicker as geopolitical risks ease. Investors often react positively when uncertainties like war subside, potentially leading to a rebound. However, it's still early to predict with certainty.
So let's say I like you to have a figure of, possibility percentage of ceasefire in July. What is your number?
It's really difficult to put an exact percentage on it, but based on the current diplomatic efforts and willingness from Iran to negotiate, I'd say maybe around 50 to 60% chance of some form of ceasefire by July. But that's just a rough estimate since the situation is unpredictable.
So that is saying the dropping or down of Nasdaq should not be significant due to optimistic about the future ceasing fire, right?
That's correct. Assuming the likelihood of a
Okay,
ceasefire
okay,
increases.
okay, I understand. So maybe I'm asking you another thing regarding this part. Maybe we move to the US economic data, right? Will US automobile sales rebound by Q3 2025 after main retail sales drop? And how will this affect Nasdaq EV stocks? Because we know the retail decline around maybe 0.9% in May, the data just released, right? So what is your opinion?
US retail sales did indeed decline by about 0.9% in May, which was worse than expected. Auto sales, especially electric vehicles, have also slowed down recently. For the rest of 2025, forecasts suggest that US auto sales could rebound a bit in the third quarter, but not dramatically. Analysts expect a modest recovery in auto demand as interest rates stabilize and inflation cools down. For EV stocks, recent retail weakness and slower EV sales can create short-term pressure. But if auto sales pick up in Q3, EV stocks could benefit as consumer confidence returns. Overall, it's a cautious outlook, but not overly negative if economic conditions stabilize.
I would say the economic condition stabilization is high possibility event, future for next half year of 2025. Therefore, what my opinion is, the EV stock should be also somehow being recovered in the next half of year, right?
Exactly. If the economic conditions stabilize in the second half of 2025, then EV
Okay,
stocks should.
understand. So my next question, what are the odds of Fed rate cut in September 2025 given tariff and oil price pressures as of now? What is your opinion?
Right now, markets are pricing in roughly a 60 to 70% chance of a Fed rate cut by September 2025. However, that outlook is complicated by rising tariffs and oil prices, which could push inflation higher. If inflation remains sticky, the Fed might delay any cuts. So, while there's a decent chance of a cut, the final decision will depend on how inflation
Okay,
trends.
so even though now it is rising of price of oil, since it is short term, then we are still considering the high possibility, high chance of cutting rates in September, right? Okay, so moving to next question. Could a Strait of Hormuz disruption in the Israel-Iran conflict trigger a 20% of Nasdaq drop? And what sectors will be resilient? This one, 20% of drop is considered as a bear market condition, right? So what is the possibility of that? I feel it is very low chance. What is your opinion?
A disruption in the Strait of Hormuz could cause a big spike in oil prices and shake global markets. But a 20% drop in the Nasdaq, which would signal a bear market, is unlikely unless the conflict escalates dramatically or lasts a long time. Generally, energy and utilities sectors tend to be more resilient in situations like this. They often see gains when energy prices rise. Defensive stocks, like consumer staples and healthcare, also tend to hold up better during market downturns. So while the risk is there, the probability of a full 20% Nasdaq drop is relatively low unless the conflict gets much worse.
Okay, so now we still think that this down of the market is like short term. Hence, maybe I'm giving you latest information. Now Nasdaq 100 future is dropping around 0.62%. And also, what is your opinion for next few days? Is that really hitting the bottom in a short-term period of time? What is your opinion?
In the short term, markets are likely to remain volatile due to the geopolitical uncertainty and recent events. A 0.6% drop is not unusual under these conditions. It's too early to call a bottom just yet, but if tensions cool off or there's some positive news, we could see a quick rebound. The market is currently reacting to short-term factors, and once those stabilize, the fundamentals might take over again. So, the next few days could still be bumpy, but longer term, if things calm down, there's a good chance of recovery.
So, my last difficult question, shall we reduce tech holding, like maybe Nvidia or Google, or like maybe Amazon, or maybe like Microsoft, AMD, TSM, etc.? What is your opinion?
When it comes to reducing or holding tech stocks like Nvidia, Google, Amazon, or Microsoft, it really depends on your long-term strategy and risk tolerance. In the short term, tech stocks tend to be more volatile, so if you're worried about near-term drops, you might want to rebalance a bit. But these companies also have strong fundamentals and often recover well after short-term dips. If you're focused on the long term, tech tends to be a growth area. Personally, I'd suggest being cautious but not overreacting, especially if you have a long investment horizon. Balancing your portfolio might help reduce short-term risk without missing out on future growth.
Thank you. Thank you. Happy conversation with you. See you next time. Bye bye.
You're welcome. Have a great day ahead. Bye for now.